Good day, folks. Welcome to ALGOVERSE channel. This is our 2025 lecture series, and this is just a sneak peek of what is going to be going on in ALGOVERSE platform. If you're not on the Telegram channel, you need to do that. I'm also going to be going live in the YouTube channel too, so you need to subscribe if you're not already subscribed to the YouTube channel. I'll share a link. It's a virgin channel. I've not posted anything there, but over time it's going to get very busy. I've had a lot of work going on, so I've not paid so much attention to it, but now we'll be getting started very soon. Okay, so first things first, this is the weekly time frame. This is ESH, mini S&P futures match contracts, ESH. So just go to your trading view if you already watched the video I sent before, and search ESH2025. This is what you want to be looking at, and you have exactly what I have on my chart. Then for the Nasdaq, search NQH2025. This is what you want to be looking at, so you have exactly what's on my chart. This is the futures contracts. You can also trade the forex pair, like this is the forex pair here. This is pound dollar, this is euro dollar, but one sticking with index futures for now. So let me be a little audible because I'm not sure you guys can hear me. This is what we want to be looking at. So far we've seen that market has been going down. You can see, so we're looking for a terminal, a bus stop, where it will likely retrace from. The middle of this black candle here, this black candle is an order block. Don't worry, these are terms that you're going to get used to just by showing up every day. I don't need to start making separate videos explaining what they are, but just know that, just listen, pay full attention, get your notepad, your journal, anything, and just keep writing. This is an order block. This is also an order block in this pair. So the idea is that I want to just take a trade. We want to predict where market is going to go, and we want to take a trade in that direction, either up or down. The market has been coming down here. You can see it's slightly going up here. I'll make a separate video when maybe on the weekend we'll do a video explaining all of these things. But if you watch the previous video, you shouldn't have a problem. You shouldn't have a problem understanding these things. Okay. So I marked out this daily fair value gap. Fair value gap is a gap. The three candle formation, 1, 2, 3. You see the high of this candle, you see the low of this candle, you see that they don't intercept. There is a gap, it's an inefficiency. It's called a sell side imbalance, buy side inefficiency, or CB. So generally called fair value gap. We want to be looking at that gap and see what's happening on the lower time frame, because generally you expect price to move efficiently. You don't want it to be having no gaps. See how price has been coming down here, moving efficiently. You see the interception of the lows and the highs of the candles. There's no gaps forming. But here, this candle's low and this candle's high did not intercept. They left a gap, so I'm marking that out. Also here, there's a very tiny gap here too. Look at this gap here. There's a gap here. See how price came, filled midpoint of the gap. The wick touched the high, the low of this gap, and it came down here. Also, it happened here too. So this is the same thing we want to be looking at here. I marked it out already. I want to see what price does there on the lower time frame. Is it going to hit the gap and go down so we can take a sell position, or is it going to go through the gap, come back to it, use that support, and go higher? That's what we want to know. Just don't want to be taking trades blindly. So this is the 4-hour time frame. Price is fractal. Everything is price is price. If I remove the time frames, you can never differentiate which is which, because it does the same thing over and over, and in every time frame. That's the continuum nature of the market. So over time you get a a better grasp of it. Just show up every day, and I promise you, you'll be on your way to greater things. Okay, so I'm looking at this gap here. This is the daily gap. I'm looking at the middle of it. See how price is reacting perfectly to the middle of it. The last hourly candle closed just at the midpoint, the consequent encroachment. When I say consequent encroachment, I'm talking about the middle of a gap or a wick. A wick is look at the bottom of this candle. See how small it is. Look at this longest wick. A candle is made up of bodies and wicks. This is the body, this is the wick. Body, wick, small wick, body, wick, wick. This is a down close candle. The greens are the up close candles. Like I said before, show up every day and you'd understand better. Don't worry, it's going to be a very interesting channel. I just implore you guys to show up every day. This market is like going to university. It's not something you learn in 6 months or anything. You go to university and you take a course for 5 years, and you want to be you want to be learning the most profitable business out there. How many years do you think it's going to be taught for? So fasten your seatbelt is going to be a very, very long journey, but with consistency, with discipline, with the right psychology, you get there sooner than you think. Most of you will be profitable in 3 years. Most of you will be buying fast cars in 4 years, 5 years, some 10 years. Some will never be profitable, and that's based on your personal traits. If you're an undisciplined person in your real life, it's going to be so hard for you to be disciplined in the market. So the market has to affect your life. You have to change your lifestyle. You have to have a paradigm shift before you can start making money in the market. Okay, now this is the 15 minutes time frame. That's what I'm looking at. See how price reacts perfectly at the high of the daily CB high and reacts at the low of the daily. So it's kind of consolidating. It has not made any significant move yet, and I want to be very sure. We just don't want to be taking blind trades. A 1 minute fair value gap was formed here. This is the first. This is the first fair value gap that was formed after the opening bell. The opening bell is 9:30. That's when the stock market opens. So I want to be studying the first fair value gap that forms. Also here, it's the first fair value gap. I want to see how price I want to see how price moves around this gaps. Same here. Okay, we are just using this ES. We are using the mini S&P futures contracts, March contracts for confirmation and for SMT divergences. You will know what that is over time, so just take time. This is what I call SMT divergence. When normally market is supposed to be moving in tandems, as it's making as it's going here, it's supposed to be doing the same thing on all in these 3 asset classes. Basically, it wants to be moving. It wants to be creating higher highs, higher lows, higher highs, higher lows in the same markets. If it's creating a higher high here, it wants to be doing the same here. It wants to be doing the same here. But if there's a low, this is a lower low, this is a lower low, and this is also a lower low, you can see, and this is also a lower low. But take for example this place now. You can see you made a lower low here, you made a higher low here, made a lower low here. So this is an SMT divergence. You can also do the same thing with the highs. You can also check for divergences with the highs. See, it's made higher high, it made a lower high here, it's made a higher high here, higher high here. So you just don't go about trading SMT divergences. They are only for confirmations. After you've had a bias and you know where price is going to, you want to be checking out for SMT divergences. That's going to give you confidence. You just don't want to be trading them without any knowledge of where price is going to go. So far, So good. The market has been going, sorry, excuse me. Market has been going down, 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 as you can see. It's been going down all day. So maybe we want to see some level of retracement. At this point, it has gotten to a very, very, very strong key zone where I expect some level of manipulation and consolidation. So currently, I don't have a bias. I don't know where price is going to go today, and it's okay to say. Don't think, as a matter of the market, you should know everything. No, you're not supposed to know everything. You're not supposed to even be right all the time. You can be right 40% of the time. You can take 40% correct trades and be very, very profitable. In fact, the best of the best traders are most times 60-70% correct. An average trader is 30-40% right most of the time. And with that, you can build a whole lot of your fortune, I promise you, with your risk to reward ratio. Check it. For every $1 you lose, for every $1 you risk, you're making $3. Let's say our risk to reward ratio is 3R, is 3. That means for every $1 we risk, we are getting $3 as reward. For every $1,000 we risk, we're getting $3K as reward. So think about this. If you take 10 trades and 4 of them are correct, do you think you'll be in profits? If you take 10 trades and you're taking $1,000 for each 10 trades, you have 10K, and you break it into 10 places and you take 10 of them and 4 of them are correct, how much do you think you'll be in profit or in loss? So do the maths and think about the exponential growth of it. So that's what we want to be doing here. We want to be looking at, we don't want to be looking at the monetary value, we just want to be checking the risk reward. We want to be we don't want to be too emotional about the money itself. Just know the math and be good. Okay, so I'm just watching, still observing. I've not seen any reason to take a trade or to get in yet. See how prices just being so messy. This last 1, 2, 3, 4 candles, see how they've been in the same range, price range. They've not moved away from here. This an hour, 15 minutes. This 1, 2, 3, 4 makes one of this candle. Do you understand? See this last candle here, the 8 o'clock candle. Everything that happened here, price opened here, it went down small, it went up here, it closed here. Everything that you see there is represented in the 15 minutes time frame from here. This is the 8 o'clock here, so you can see it came down here, it went up here, and it's closed here. So you can see closed here. That's it here. So these are things we want to be studying, we want to be checking them out. Don't worry, with time you get a better understanding of it. So just kick back, relax. This is CB I'm monitoring here. I want to see if price or how price behaves in this orange gap. There's a lot of information, trust me. There is a whole lot of information here. It's a boundless market. You can make $1 million in one day, you can lose $1 million in one day. So don't just focus on how much you can win. In fact, your primary interest as a trader, your primary role as a trader is to preserve capital and manage risk. So you shouldn't be even focused on the profit at all. You should be looking at surviving in the markets. That's your first role as a trader. You want to look to survive in the markets and not to just take trades. Yeah, sorry, and I was trying to fix something because it seemed like some of my drawings were, I don't know. I just refresh it now. It has aligned basically. So I can see weakness here because see how price is reacting to the midpoint of this daily CB. When I say daily CB, I'm talking about this orange gap here. That is, let me take it back to you so you can see what I'm talking about. This gap from this low of this candle to the high of this candle, and I'm also looking at the midpoint. In fact, you want to divide this gap into 4 quarters, that is here and here, and see how price reacts to every one of those levels. So currently it's showing weakness. See how price used this first fair value gap to go down. It's because I was teaching you guys and explaining things. If I was on this lower time frame, I should have seen this and I should have taken a trade here. Should have taken a short position here, but there's always room to take another trade, so no rushes. If we don't take a trade today, doesn't mean we won't take a trade tomorrow. There will always be a trade. There are so many things I'm going to introduce to you guys over time. I don't want to flood your head with so much information, so take it very slowly. Just go with me. These are videos. You don't want to watch these videos just once. You want to watch it over and over and over again, and you want to jot things down while you watch the video. You want to be taking snapshots or screenshots of this and writing in your journal. This is what he said, and then you want to go to your chart and you want to see it play out by you want because this thing repeats. Is an algorithm, don't forget. So it has a language and it repeats. It's not random. It's not so random as it looks, and that's the language I'm trying to teach you guys here. When you go, you want to practice it on your own, and when you see that it repeats, you see something that I said you see it happening, you want to write it down, you want to take a screenshot of that. Do you understand? That's the way you learn. You learn with by writing down information you see. If not, it's going to just escape your brain and it's going to be like you never saw it. Maybe I would give you guys access to my journal. The journal I was using 2024. I use a journal here on Telegram. I'll share the link so you guys should just see what I mean when I say how to journal or effective journaling. Okay. I don't have a bias yet, like I said. This is high resistance liquidity run. I don't want to be in markets like this except I see very, very quality setups, because the real traders, the real people that make a lot of money in these markets, they don't trade every day. They trade once, 2-3 times in a week. In a session, one trade per session. But how you'd know a fucked up trader that has no knowledge about this market? They take 1 million trades in a session, and you the only thing that results to is being wrecked. You'll wreck yourself. Don't worry, you don't know what all this is, but I'll explain it to you over time. This is the opening range gap. This is the new day opening gap and the new week opening gap. These are the sessions. This is PM session. Everything I'm saying here, everything that you don't understand, I'm giving you keywords. Anything you say, just list them out for me. I want someone to do that for me. If I say new day opening gap, you hear a term that you don't know about or you've never heard before, write it down. I want to have a list of it. Then over time I'll start making videos of every one of them, explaining them. That way you'll be able excuse me, that way you'll be able to understand the language properly. I'm looking at the midpoint of the opening range gap. This is where we closed yesterday, basically at 6 p.m. That's when the market closed, and this is where we opened at 9:30 today. Let's go check 6 yesterday. This is Tuesday. See where the market closed here. Okay, the market closed here. This 6 o'clock. It's an up close candle. So you see where the market closed. That is this point here, and then we opened here. If you want to see it clearly, you can just toggle this to regular trading hours, and you see your opening range gap clearly. This is your opening range gap. Let me clean out this lipstick so you can see it clearly. So these are the opening range gaps. If you want to see it clearly, toggle to regular trading hours. And just so you know, if you want to see everything I have and you want to see if you want your trade to be on the same time as mine, you have to toggle to New York Eastern time. Wherever you are in the world, don't worry, we'll have the same time, because the market it books based on that time. Don't let anyone tell you otherwise. The market operates with the New York time, so you want to make sure you set your time zone to New York. Okay, let's go back to electronic. All of this is going to seem like a lot of information, but believe me, like I said before, show up every day and it's just going to be there. How did you learn a language growing up? How did you learn your native language? You just heard your parents speak it to you every day from childhood. You never had a day where you had to sit down and learn it. You just learned it. You just started speaking. How did you learn how to speak English, how to talk? Constant exposure. It creates a neural network in the subconscious mind. Do you get? So that is what you want to be doing. You want to show up every day till it sticks. Okay, let me put back my lipsticks on. Okay, now I want to be looking at this fair value gap here. Let's see how price reacts there. I'm bearish. I think I want price is looking like it wants to go down, and that's a good thing. It should have been a very good entry position for me, but I did not take the trade. No need to beat yourself about it. Other trade to come on. I'm studying these higher time frame charts more because I like the parent time frame. They give directions to the lower time frame to do. They give you incentive of where the lower time frame is going to be going to, and you can easily take a trade. So let's look at the low of this gap and how price reacts to it. The ES has been very bearish. It's not even reaching this place. This blue dotted dashed line is an order block on the weekly time frame, is the midpoint. When I say order block, I mean this. When I say mean threshold of order block, I mean the midpoints of the order block. When I say consequent encroachment, I mean midpoints of fair value gaps or wicks. But the midpoints of order blocks are the mean threshold. So I'm looking at the mean threshold of this. Like I said, I have no bias, except you just want to scalp, intraday scalp. But if you want to look, if you're looking to capture the whole range for the day, it's gonna be a very difficult read right now because price has been going down. So if price is to go up, where do you think it's going to draw up to? And if it's go down, where do you think it's going to draw down to? That's what we want to know now. This is a very, very good liquidity spot. So I'm looking at this 2155. If price is to go higher, and for ES, this is a very, very good liquidity spot. Okay, price closed below the low of the opening range gap, below the the consequent encroachments of the opening range gap. We're still standing still. We're not rushing in to take a trade. What does price want to do? This is a very, very, very hard read on price. If you're inexperienced, you lose a lot of money on days like this. And fortunately for you guys are learning. This first lecture is on a very, very hard day like this, so you need to know how price, because it's not always rosy. There are some days where it's just high resistance liquidity runs like this, and these are the days you want to be learning, because it is more important to know when not to trade than to know when to trade. So put that in mind. You want to know when not to trade. So you can see I'm not saying correlation. It's above the 0.25 level of the opening range gap here, and it's trading below the midpoints here. So we're still sitting and waiting. If you ask me, I think price is going to go down now, and I think I want to take a trade in that direction, because I just saw something now. See how price is reacting here. Are you seeing what I'm saying here? It's not going through, it's not going past this. It's reacting at the bottom of it, but it's also reacting at the high of this. So from here to here, you can see this is supporting price to go up, this is supporting price to go down. So you're just going back and forth. That's what we call consolidation. I want to see price leave this range. Okay, let's see if this happens. Yeah, I'm not taking a trade. Please don't take a trade. Don't take a trade. We might even not take a trade today. That's very okay. Very okay to not take a trade today. You've not lost, because even if it pans out, you didn't lose, because you never got. You only lose when you take a trade and you lose money, but if you don't, you've won. So see how it came back to this fair value gap I stated earlier. See how it touched the exact midpoint of it, and it started coming down. It created another fair value gap here. That's what I was looking at when I drew the arrow. Sorry, I want to duplicate this. You can do that by just holding command and moving it. I use my MacBook. I think you can use control if you're not using a MacBook. So you see how price touched the low and started pulling down. I would have taken a trade if it's okay to not take a trade. It's really okay. Don't beat yourself up for missing a trade. There are thousands and thousands of trades. So my stop loss would have been here, my TP would have been here. So just 1.5 risk to reward. It's not so impressive, but it's good. At least it's a positive R. I hope my laptop don't die on us. I really want us to go through this whole session together. So if I had put $1,000 here when I drew the arrow, I would be hoping to make $8,570. Notice how we didn't even have a drawdown. We didn't even take us to a negative balance. It just came straight down. So it's just coming straight down. But high resistance liquidity runs are very. You have to be nimble. You have to be very careful taking a trade in conditions like this. Today's CPI press release is a high impact news. It's a day where newbies are not advised to trade. Just experienced traders. You see, if you want to know, if you want to be able to check the calendar to know high impact news and all that, visit visit what's happening. So this way you can see your economic calendar. You want to tell whether you're going to be having a high impact news or a low impact news. Check this link, everyone. Anywhere you see the red envelope and you have USD in front of it, watch the time. Also make sure you set the time zone there to same thing here, New York time, so it can correlate. Okay, let me just leave this on here for a while, then I'll take it off. You can store it to your bookmarks, it's very important. So we are trying to predict price. Like I said, we want to tell is price going up or is it going down, and we want to be able to take a trade in the direction, and we want to be able to put our stop loss. This is our stop loss. It protects you from, if you watch the video I sent, the link I sent to you earlier, they explained what the stop loss is. So it helps you to prevent, so that when price goes against you, you don't just keep losing till you lose all the money in your bank. If you have $100,000 in your bank, in your wallet or your account, you don't want to lose the whole 100k. Maybe you want to lose 1k. So you said if price goes here, then if price reaches this place, then my trade idea is invalidated. I want to be stopped out. I want to get the fuck, count my losses and move on. That's what the stop loss is meant for, so you don't hurt yourself. Let me push this to the side for a minute so we can see the clear price action. Okay, sorry. Look at this fair value gap here again. See how price tapped into it one more time. Also this one. So I would have taken another short position here, but this is, like I said, high resistance liquidity run. You don't want to be adding positions. Instead, you want to be moving your stop loss to break even. So you want to like maybe move this down here, so that you're now in a zero risk business. If the market comes and stops you out, it stops you at the break even balance. No loss, no wins. Then if it comes here, take profits. So I'm watching this fair value gap again. Let me draw it out. This is very crazy, because this 15 minutes time frame, see what's happening on the 15 minutes. So I said you always want to look at the 15 minute time frame. This whole move that you saw here, price came back up and closed above here. It's not a good sign. Now it's doing the same thing here. It's not coming below this midpoint on the 15 minutes time frame. I wanted to close below the midpoint to validate my short position, but it's not doing that, so just have to be careful. If I was on this trade, I would probably have closed it, or I would have taken partial here and move my stop to break even. That's how you manage a trade in high resistance liquidity run. Then also watch this other block here, this body. This and that, then I want to be checking out. See how price tapped that perfectly. See how prices respecting, the bodies are respecting the high of this 15 minutes fair value gap, or BC, buy side imbalance, sell side, buy side imbalance, sell side inefficiency. If it is this is CB, sell side imbalance, buy side inefficiency. Don't worry, like I said before, if you hear any keyword, just put it down on a piece of paper, list everything out. We'll make a video on each of them and explain them to you. These are ICT concepts in a circle trader. All of these things are, so many people trade so many things. Some people who are retail traders, they believe that markets goes up and down due to higher demand or higher supply. If there are too many people buying the market, they believe the market will go up in general, or people are selling off the market, so they believe the market is going down. But no, it is completely algorithmically driven, except on days like today where there is CPI, high impact news. They can have some form of manual intervention in the market, but besides that, the language is very clear and precise. So see how price respected. I told you I was looking at this fair value gap here and here. See how price, okay, let me do this again. So I would have taken another short position here as price moved up there. See how the body is respected the low of this fair value gap, and the wick touched the other block here. So that's the language. If it gets to this point, then it will be a win. I think it will get there. So if I had taken this trade, we would have won. No cause for alarm. Better trades where we will literally capture the whole daily range. Imagine what we're doing here. Imagine if we're catching the trade from the 15 minutes. Maybe we're expecting price to get down here, and we're catching the trade from here. Okay, I'm still very much bearish though. Okay, let me take this off. See our price respected the other block mean threshold. This other block on the E-mini contracts. So you want to see PDRs on each pair respects. We want to see PDRs act as resistance and push price lower on this time, on this pair and on this pair. You can see this CB consequence encroachment. You can see it's holding price here, respecting it perfectly. We can also see this one too, respecting the OBMT, nice other block mean threshold perfectly. See the bodies, the wicks do the damage, the bodies tell the story. So you want to be able to study the body and see what's happening. No rush, no rush, no rush. Okay, now this is close. The 5 minutes already closed below the mean threshold, below the consequence encroachment. I'm sorry, I'm just interchanging the words. When we talk about fair value gaps, we're talking about, and when we talk about midpoints of fair value gaps, we call them consequence encroachment. When we talk about midpoints of other block, we call them mean threshold. So you want to put that in your notes. Sorry about that. Is the neighbors. So see how price is fading to get to this low. Let's see if this fair value gap still holds price and pushes it downwards. High resistance liquidity run, like I said. Let's see what's happening here. Damn, I have just 16. I was hoping price we get to like 1050 because there's a macro. When I say macro, I mean put this in one of the terms, one of the unknown terms. I'll tell you what this is. It's like a time range when the market does specific things. And there's one macro from 1050 to 1110, and I was hoping we get there. Okay, so price went on to touch the other block again. See how it reacted to it perfectly. What is the open of this candle? This is the open, this is the high, this is the low, this is close, OHLC. So let's look at the open. The open is 19661.75 was the high of this candle. 19661.75, perfect to the tick. You see, it's algorithmic, it's all scripted. And then it touches it and it closes below the midpoint of this candle. Okay. No trades yet, folks. No trades, because I'm trying to teach you how to be patient. That is what you want to be learning, because that's the number one quality that will differentiate a winner from a loser in this market. Patience and discipline. These are qualities you want to really master. You want to go hard on these qualities, because it's not about any other thing. If you don't have these qualities, you will lose. Even if you know everything here, you will definitely lose, I promise you. I'm telling you from years of experience, you need to develop the qualities of patience and discipline. If not, you're going to lose. If you're not already on this channel, if you're not already subscribed to the YouTube channel, I will drop a link. Like I said, it's a virgin channel, but you guys can run up the numbers, because very soon it's going to be too crowded. Very soon. What is starting out here, I don't think any Nigerian trader have done it. The traders out there that you see, they don't trade this concept. We have Nigerian traders trading ICT though, but not the popular ones that we know. So see how the midpoint is, it's reacting perfectly. I want you to watch how I analyze price action, and I want you to check other traders you see out there, and see how they analyze the market. Then compare the level of precision and accuracy. Compare it, and I think you'll have your answers. It's not about who has made the most money, it's about who will make the most money in the long run. With this concept, you definitely are going to win. You're sure to win. And that's a win. That's a win. From here, this is where we started the trade from. Zero drawdown, zero. We never had a minus, a negative drawdown. Straight to take profits. Okay. That's a win. So let's take this off for a minute. My focus is on the on the consequence encroachment of this CB. My focus also this 3-month discount week consequence encroachment. Let's go to the 3 months and see what we're talking about. This is the 3-month chart. So this is the week I call the discount week because it is below the market price, and it's like the down week, not the up week. So I call it discount week. 3-month discount week consequence encroachment. Let's go back to the weekly. Let's not mess up our charts. So see this back and forth here. See this back and forth here. Come here. It has made this fair value gap a balanced price range. If price is going to keep going down, I don't want it to come above here again. So maybe touch the low of it and just pull down here. Let's see how that goes. Let's see what's happening here. Damn. Okay. Let's see how price responds to this low. If price even touches this 8 o'clock opening time, this I want to take a trade down. Now I'll be more inclined to take a trade now, since I've seen some confluences. Price has closed below the opening range gap here and here. Price has closed below the 3/4 here. It's closed below the half of it here. So I'm more inclined to go lower now and target this equal lows, or maybe this new day opening gap, or better still, this previous day low here. These are sweet liquidity spots. There's a lot to learn. There's a lot of information. This market is a boundless market, believe me. It's like an ocean. You can't see the beginning and the end of it. That's how much. It's same thing financially. Like, you can make so much money. There's no limit to how much you can make in this market, and there's no limit to how much you can lose. But just don't focus. The worst thing you want to do as a beginner trader is to focus on how much you can make. Once you start having that kind of mentality, you're corrupting your psychology. And this whole thing I'm doing here, explaining, calling out PDRAs, they're just technical analysis. See, the trading is divided into technical analysis, fundamental analysis, then trading psychology. You want to have the psychology. Under trading psychology is risk management. You want to be able to manage your risk. There's there's T and FA. That's technical and fundamental analysis. Then there is risk management. Then there is trading psychology. Trading psychology is general, just to know how the algorithm are thinking, how the algorithm is thinking, as opposed to how a retail trader is thinking. Because when the market is going up here, retail traders are trying to buy. But in the market, there's always going to be buyers and sellers. And who is selling to those buyers? It's the traders, it's the algorithm. So you want to be going according, you want to be following the algorithm here. When a retail trader sees this, they want to take a buy here, they think it's going to go up, and they put a stop loss here. Do you get? So what do? They sell to those buy orders, bring it down, and they target their stop loss, because when they place a buy order here, they intend to buy low and sell high. They put a stop loss here to buy low in case the market is going against them. But the market is, the algorithm don't want you to have that buying low and selling high, so they'll force you to buy low to sell low. Do you get? Watch this thing over and like rewind it, pause it, and try to understand what I mean. I'll make more videos on this, every one of it, don't worry. Just list them out for me. That's your assignments. I'll know the serious students amongst us, and over time I'll pick out some people and I'll put them in a private mentorship. This group is just, I think we are less than 30 or just a little above 30, but over time we would have thousands of people on this group, and I promise you that's going to happen. But I'll select a few of you guys, the real dedicated ones, and I'll put them in the ALGOVERSE inner circle. Man, we're gonna rock the world. So discipline and patience, I want to see those qualities in you, and if you're good, if I see it in you, you're welcome me on board. So we have one winning trade today, even if we did not take it, but it's a win. If I had to contract sold here, I would have taken one here and I'd have left the other one for a runner, probably targeting this relatively equal lows, and see how price even targeted it here. You see, that would have been a 2.6 risk to reward ratio, but okay, let's stick to that. No panics. Like I said, I'm more inclined to go lower. I just want to see how what the macro presents for us. I would really like for price to come to this fair value gap here, and I'll take a trade there. But if it doesn't, okay, still there is 1,001 opportunities in the market. If we don't take one today, we'll take one tomorrow. But in the long run, we're gonna make money, lots of money. Very soon I'll be sharing live trades with you guys. I'm planning on getting $100,000 demo account, prop firm account. I want to pass it with you guys. We'll do it together. See, we're a family here. We're all equal. Okay, I'm growing to teaching you guys is me learning, because if you remember back then in school, when you learn something and then you teach the other students, you hold tutorials for them, what do? You're making it stick. You're learning the more you get, and the more you teach, the more you expose yourself to the right things, the more it sticks to your subconscious mind. And when it sticks to your subconscious mind, it becomes a part of you. A subconscious mind, anything in the subconscious mind is what really controls us. It controls 90%, 95% of how we behave, what we do, our character, who we are. Everything is in the subconscious mind. Don't worry. ALGOVERSE is a place that we're not just going to be teaching you how to make money. We're also going to be teaching self-mastery, self-discovery, the paradigm shift. Why is it that the rich are just 1% and the poor is 99%? There's a very, very, very clear disparity between the way these people think as opposed to how the commoners, the poor, think. They have a different way of life. It's totally opposite of what the others do. You get? So everything that you think is a norm to you. You have to be willing to unlearn, to learn. And don't worry, with time, it's going to be a very beautiful journey. on this platform. I promise you all, it's going to be a very, very beautiful journey. Just fasten up your seatbelts and be ready for the ride. Okay, I think I'm on 7% now. I might not be able to take this trade. My laptop might die on us. I'm at a place where I can't really charge now, but it's all good. So good. This knowledge is power, believe me. With this knowledge, you don't need to work under anybody. 9 to 5 is slavery. It's the matrix. That's what I'm telling you. You want to be able to escape the matrix. You don't want to be working under somebody in any kind of firm, no matter what. If you're answerable to somebody, then you're a slave. 9 to 5, you wake up in the morning like a robot. They control you. You're making money for someone else. No, you want to be able to have your own franchise, make money for yourself. So everything about ALGOVERSE is teaching you how to escape the matrix, how to be among the top 1%. See, when the market opened at 9:30, it looked as if it was going up with this big spike, the CPI news. Every person out there, when they see this big candle, this is how it is on the 1 minute, what they're going to say is, whoa, we're going up, we're going up, we're going up. And then the market tricked them again here, making them feel like, wow, we're really going up. And then, boom, see the way it's pushing the market down. So it's counterintuitive. What you think is right is apparently wrong. Most things that you think is right is wrong. It's like a mirror. So like I said before, you want to be checking out the parent time frame. Look how beautifully this market is going. See how beautifully it's going. My long-term target is the low of this previous candle that is here. Maybe I should draw it out before the laptop dies on us. This is brown candle. When I have this is where I do my candles. When you see blue candles, anything blue is talking about weekly. Anything brown or orange or whatever, these two, they're the same colors. This orange or brown is daily. When you see brown like this, okay, let's call this orange. When you see orange, it's daily. When you see brown, be it a gap or a line, it's 1 hour. If you see purple, it's 15 minutes. So that's how I communicate. If you see yellow, it's 1 minute. So you want to be able to just, but this is a game. This is your canvas. Paint it how you want it. You don't have to have yours exactly like mine. Play around it. Just, it's fun. Make it fun. Just imagine it's like a video game. You're playing the game and you're at the scoreboard. You're looking at the scoreboard. But this time around, it's real money. So you want to be able to play the game, and it's a game of emotions. So you have to be very careful with your emotions in this market, because money really, really increases emotions in people. It brings out when it comes with a lot of emotions. So you want to be able to kill that emotions to be able to profit in this market. If not, for every small slight drawdown or loss you take, you start panicking and you want to revenge trade, and the only thing that comes out of revenge trading is more losses. So like I said, psychology of the market, you want to know it. Okay, so I've set out my long-term objective for this, and also if this, I won't take a trade with you guys, but I don't think this market will permit us. But believe me, my long-term objective for this is also, let me see from here, because I'm looking at too many things. I have like 8 screens I'm looking at the same time. Okay, I'm looking at this London low. I don't want to be targeting this. I want to target this instead. So the London low is this. So let me draw it out. my long-term objective, or let's just say the high of, well, let's put it as 15. Okay, let's put it as 1 hour here. Let's assume we're drawing it out from here, so it's going to be the same thing. Okay, it's brown already, so yeah. So now we have our objectives. I'm expecting price to, that price comes like this and comes here. This is what I want for price. This is what I want to happen. I want something like this, or something like this. If I was watching it in real time, if there is any change in sentiment, I'll be able to capture it. But for now, this is what I think is gonna happen. So I'll take this up in a minute because it's obstructing what we're doing, but just so you know, I'm more interested in the low of it and not the high. Low and midpoint of this gap here. There's a gap that's about from, let me take this out. Since we already have our objective here, we know that this is where we want price to draw to. So what am I studying now? What am I looking at? Okay, I'm looking at this gap too. If that price touches the low of this gap and goes down, or look at this gap here, there's a beautiful invasion fair value gap here, and invasion BC. If price can tap the low of this gap, I'll take a shot there. Also, what do we have here? Let's see. This is very beautiful. Something like this. If price can touch the low of this gap. Damn, sorry. If you watch that video very well and practice, just don't binge watch. You want to be practicing everything you see. You want to have your laptop and your chart open beside you, and everything you see, you want to be implementing it. You want to get used to it. This is so perfect. There's another gap here I'm looking at. Oh, okay. Look at this. Look at this beauty here. Let's mark this. I don't see that. Also, I don't see price trade below the consequence encroachment, then come back to it. Is that support? And this is what I mean. I don't see price do something like this. Go up here, come down, trade back to it, and push down to our objective. So I'll be closing now. Hopefully you found this insightful. Just share your feedback to me, and that will give me some kind of encouragement to teach you guys so much more about this market. You have the whole of this year and next year, 2 years from now, 3 years from now. It's going to be a beautiful journey. We are now family. Just welcome to the family. We are the ALGOVERSE. Okay, have a nice day, y'all.